All right, yo, welcome back to the channel. Yo, it's nephew, 0x nephew. Okay, check this out. In this video, we're going to talk about dollar cost averaging, why you should be doing it, and how to actually do it, okay? So make sure you subscribe to the channel. Just click that button right there. Boom, now you subscribe to the channel. Make sure you do that. All right, in this video, like I said, I want to tell you exactly how you go about doing it and why you should be doing it, especially during this time right now. This is a crazy market we in right now, and it's a lot of uncertainty in the markets right now. So anybody who's involved in the market would know that every time you look up, there's bad news and there's more reasons for why the price should drop. And a lot of people who might have bought in at a higher price might have, lost a lot of money. So you can see, like, I'm just going to use Ethereum for example. Ethereum was all the way up at about 4,600, 4,700, and then from there it just came down. Now, if you would have put a lot of money in at any given time, you could have caught this at the wrong time. You could have bought here at 1,900 or 2,000, you would have did well. But if you bought more at 3,900, and then it came down, you would have did bad. But if you continue to just buy at different times, you would average out to somewhere down here. Like, you would have a average price. Now, the way I've done it, it's been very beneficial for me as a trader to use dollar cost averaging as well as averaging down. And I'll explain the difference right now. So when you dollar cost averaging, you're using the same amount of money or around a fixed amount of money to keep buying the same asset over and over and over. So whether you're buying S&P 500 or you're buying Bitcoin, what you're doing is you're just constantly buying at the same price, so that when you buy, you're buying at any given, it doesn't really matter what the price actually is. It's just that, like, you get paid every Friday, you get paid every Thursday, you take $50, $100, and you keep buying at whatever the price is, regardless of what that price is, instead of trying to time the market. It's been studies showing that basically anybody who tries to time the market, the majority of people who try to time the market can't, and they will just basically get it wrong, and then will end up losing money in the process. But a person who just buys, whether it's down, whether it's up, and just keeps that same fixed amount over a duration of time, usually comes out on top better than the person who tries to time it. Now, I'm gonna go to the 1 hour chart, and I'm gonna show you, like, basically what I've been doing during this recession. So, and I'm calling it a recession because that was the original definition before they changed it. Now, I'm just gonna tell you like this: when the price came down to a certain point, I wasn't in the market. I was waiting. I waited out the market. I waited until it got to a place I thought it was extremely low. When the Terra Luna crisis came and we got all the way down to 800, I knew that Ethereum was never gonna be, like, to me, it felt like that had to have been the bottom. Like, I just don't see any event that could be more catastrophic than what happened with the Terra Luna stablecoin crash, and with Elon Musk, selling almost $1 billion worth of Bitcoin at the exact same time when that happened. So that caused the price to plummet. I started buying Ethereum around this point in time. Now, you had a lot of people saying Ethereum was going to end up going down to 500, all down here, like super duper low. And that could have been possible, but instead of waiting to find out, thinking that I can get in at a better price, I just continued to buy. And as you can see, the price went up. Right here is around the 1200, 1200 range, 1900 to 1200 range. Then it came back down to 1000, then it came back up. And so every time it moves around, it just bounces around. This is a trading range. So in that range where it traded, I was buying basically these dips. So we call these the dips. So when you find a range, the support, and then the resistance, I start buying around this time. So dip buying mixed with dollar cost averaging allows you to get most likely the best price, but you don't wait until the price keeps coming back down to where you want it to go to. You just buy throughout whatever range we in. Here, I would have still bought here. If it come here and then it came down, I would have bought here. So every time it moves down, I buy the down parts. I buy the pullbacks, and I buy all the retracements, and I buy at that time. So if you get paid on Friday and you look at the chart and the price is as high as it's been, and the price is looking super high, let me turn off this Bollinger Band for you. If you're looking at the chart, let's say for instance it's like this. If it look like that and it's just like super high up, and like it's like at the peak, or like this, like at the peak, I'm just showing you right here on the right hand of the screen, this is probably not the best time to buy, right? So I would wait till it come down, and it came down right there. Let me zoom in. So when it came down to this level right here, when you see all this red, that's when I would have bought. So I'm using TradingView. This is a charting app that you could use. It's free to use. I use this, you just type in the asset names and you can see what assets you want to trade. What I'm doing with this is I'm utilizing this to check the average prices, and I'm creating price resistance and price support so that I can know is the bottom of the range or the top of the range. So this is like the top of the range right here. This would be considered the top, and this would be considered the bottom. So like this is like the top of the range here. So I wouldn't buy up here, but I would buy down here. I would buy down here. I would buy down here, and went up higher. So when it came up here, if I was still dollar cost averaging, I would buy down here. Let's just move this up because it wants to change. I would buy down here. I would buy down here. And this is like every Friday, every time I get paid. If it dumps down, cool. I'll buy down here, down here. And what you're doing is you're just waiting for it to be a very big pullback, and then I would just buy into these pullbacks. Now, by doing that, like I said, you have moments where you have a big pump up, and all the coins you bought in that time frame will just go up in value. It's up to you if you want to take profits and sell it and wait for another pullback like this, or it comes all the way back down like that, where you would start buying. But even if you were buying in this range, and this range, and this range, and then you see that the price just dropped even further, I would just keep buying here, 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 here. And the next thing you know, you see it go back up again. And what that does is the coins you bought up here that were in the red down here got averaged down when you bought down here. And what that means is, let's say, for instance, you bought, let me give you an example. Let's say you bought something for $10 from somebody, and all of a sudden that thing that you bought at the store is now only selling for $1. Okay, so if it's selling for $1 and you bought it for $10, and you feel like you lost $9 in value because it went all the way down to $1. So if you were to buy another one, right, then all of a sudden it's as if you paid $5 for both, because you bought one for $1, one for $10. If you bought another one, and when you bought the second one, it was like you bought two for $5, right? Because the average price of the 10 and the 1 would just end up being in the middle, which is around 5. Now, I'm not doing precise math here. I'm just doing this off the top of my head. But this is how you would go about thinking about it from that perspective, that when you actually buy the thing twice at a different price, you actually lowered the price at which you paid for both. And so that's the average price. So if you bought 10 at $1 and you only bought one at $10, the average price then would be something like $2.50 to $3, because it would be as if you bought so many at 10, or you bought so many at $1 that it negates the fact that you paid 10 for one of them. Okay, so that's the way that I make money in trading, and I've become a profitable trader, because even if I buy one Ethereum up here for 1,700, and then it came all the way down to 1,200, if I buy 5 Ethereum down here at 1,200, I end up making it as if the 1,700 that I spent on this Ethereum, it comes down to become something like 1,400 or 1,300. It just comes down lower. It becomes average down. So when we finally pump up again, I don't need to wait to get to 1,700 to be in the green again. I just need to, as soon as we get past my average price, I'm in the green. So I lower my price. So in this way, I don't have to worry about if I pay too much for it or not. As long as I had declared that I was going to keep buying, when I buy at a lower price, if it goes lower, I actually get a better deal in the long run. So this is why you don't want to go all in. Like if you had $100,000, you don't want to buy $100,000 worth of Ethereum at 1,700 and then have zero money for when it drops down here. Now you have nothing to work with. You can't average down because you didn't leave any money on the table to buy any more if the price went down. So that's more of a risk assessment situation. But in the same sense, I mean, it's, if you got good risk management skills, then you would know that you definitely don't want to spend all your money all at one time at any given time, unless you can confirm that there was a bottom. Like if you knew that the bottom, if we had some type of way of knowing for sure that this was the actual bottom right here at 1264, then yeah, you would want to put the $100,000 in there. But how do you know? Like, there's no absolute way to know that even though we broke out here and we shot all the way up to 1674, that we won't be on our way back down to 1,200 or even 1,000 or even down to 826 just to retest this level yet again. So we don't know what's going to happen, right? So this is why we don't put all our money in all the time. Now, when it comes to taking profits, what I do is whenever this does go up into the profits, I usually take 30% profits from my trade and I leave the rest in there. So in this case, if I have 30 Ethereum and I've averaged down and I made it to where when we got down to 1500, I averaged down. I was in the profits. When we came all the way up here, I basically sold 10 Ethereum and kept the rest in there because I don't know if we're going to keep rising to 1800 or what. But when it came back down to 1554, I start buying more Ethereum again. I buy more because I'm trying to average down again. And I'm actively averaging down. I'm actively buying more. I'm selling for profit. I'm taking some profits out and then taking the money and slowly reinserting it back at a cheaper price, which even though to a certain extent isn't as cheap as when I bought down here, it's just that I took profits here and I want to also reaccumulate back to 30 Ethereum. So I'm like, my goal is to have at least 30, 35 or 40 Ethereum, whatever, at all times, no matter what. And I don't want to be selling all my coins, and then next thing you know, Ethereum gets the best news in the planet, and it shoots up to 5,000, and it's too late for me to get back in. So for me to avoid that, I don't ever really sell all of my bag. I just sell half or 30% of the bag, and then immediately when there's a pullback, or when we go back down, I start averaging down again. Now at the same time, I ruin my average by actually buying back in at a higher price, but at the same time, I don't like leaving like a whole lot of profit on the table and just letting them take it back and putting it back and taking it back, because I have bills and we in the middle of a bear market, and obviously I would want to take some profit out to pay for bills. There's nothing wrong with selling, especially at a time like this where there's no certainty in the market. We could easily go all the way back down to 800, and then it would be stupid that I never took profits up here. It would just be extremely stupid. And I don't want to be a dumbass trader. So of course I would sell some up there and buy some more down here. And of course, if you have a job or you have other income streams, then you would also have less worry and you could be more confident to know, hey, if we do revisit these levels, that's actually something to be cheerful about and happy about. I would be more sad if we never go back down to those levels, simply because now anybody who totally missed out on getting in. But we have a high chance of actually coming back down to these levels at some point in time. So that's why I take profits and make sure that in the future, if it does go back down to that price, I will be able to average down. And I don't put as much money in there as you might think. I always leave half my bag outside, so I have enough to buy 30 Ethereum, even if we do go back down. So I'll hold 30 and I have enough to buy another 30 sitting outside of the trade waiting in order to average down into the price. So I hope this video helped you guys, man. Smash that like button, hit that subscribe button. If you have any more questions, man, I want you guys to follow me on Twitter. This is my Twitter account, 0xnephew. You want to know what the 0x stand for? It just is the first 2 digits of the Ethereum address. And also, guys, I'm going to leave a link in the description to my trading group. This is also a Plethora Moons. It's called Plethora Moons. It's our alpha group, also a Web3 security group we created to help people with staying safe in the Web3 space, man. You guys know a lot of people getting hacked for NFTs and getting their wallets drained and wallets stolen. So we created this brand to empower Web3 users in the space and also educate people on how to protect their accounts and their wallets. So go ahead and support and also learn a lot of different trading things. If you guys want to chat with me there, I'm going to be there hanging out, waiting for you guys. All right. Talk to you later. Peace.